Hello, everybody. Welcome to another episode of Arthur's Roundtable. Super grateful for everybody that's been paying attention and sharing, and we really appreciate that you're doing that. So I have to say thank you to the group that's on the call today. We've had a webinar with Family Office Insights, and we learned a lot, and we're super happy to have them with us today to learn even more and share it with the wider group. So ladies, thanks for being here. Who would like to take it first?
Thanks for having us, Arthur. Do you want me to start?
Sure.
All right. So I'm Janae. My background is I came from corporate America. I spent 17 years at 3M doing sales, marketing, and management. When I retired, I moved into real estate for a little bit. And in doing that, I started investing, and my friends started watching what I was doing and became interested in that. And so as I moved forward with that, I drug a few people with me in the investment space and realized that there were a lot of people that didn't understand what they could do with their money and how they could put their money to work with them. So I went on a path of learning about helping people invest their money and growing their money. And so moved into, after being in real estate for about 6 years, decided to help my friends that had businesses that needed money. And so moved into the fund space when I met Deanna, was also running businesses, an entrepreneur. And she then stepped in to help us put the thesis together to work this fund that we've now got going.
Great. Who's next?
Perfect.
I guess it sounds like me, just as a baton pass, and I'll pass to Christy as well. As Janae mentioned, we met and engaged around entrepreneurial topics, things that we found in common with businesses and such. And my background is as a digital transformational executive of 35 plus years. I was very accustomed to seeing changing markets and seeing how big companies, small companies, and startups were all addressing change management, transformation. And I noticed how hard it was for people. But the other thing I noticed, the through line, was this idea that investors and different class of investors were looking at change and looking at transformation of companies in very distinct ways. And so one of the key components to the thesis is this idea that there is no capital entity or expertise in market currently for small businesses in the U.S. And so when we start to look at the bigger ecosystem, we see such an opportunity that's very much in plain sight, but for a number of reasons, which we'll probably end up talking about, they're not able to participate. And so the size of the market, the visibility and importance of the market, and the opportunity for transformation to me as an entrepreneur is just too irresistible to pass up. So I joined forces with Janae and Chrissy. I think where Chrissy and I intersect, which is kind of fun, is we both see transformation, specifically using AI, as an opportunity to increase margin, extend and create growth for what have been organic but profitable businesses without that expertise. And so Chrissy has a business and I dabble in that space. And so we think she brings a lot to the table in terms of her origin as a business owner, corporate America, and this transformation sort of piece or component to our thesis.
Great. Thank you. Chrissy?
Yeah. Hey, everybody. I'm Chrissy. And Deanna's talked about my 30 years in corporate America. So I come from an very varied background of being an entomologist for the military, being an entomologist for Clemson University. From that entomology degree, starting a pest control business with my ex-husband. But I've also, worked in pharmaceutical manufacturing, working in project management and operations, and then also being a VP at Bank of America. So if it's out there, I've probably done it. And I met these gals a couple years ago and really got hooked up with Janae because they were looking to do a podcast for what she was trying to build. And I learned how to do that. I was like, all right, let's do this podcast. And in listening and learning and finding out what they were doing, I started also just working on the operations part on the back end with them and was like, hey, I want to come along for the ride on this. This sounds really amazing. And as Deanna talked about, I work with really small businesses who, they're looking to grow and they're feeling really stuck. But they're so busy building their business and usually, building and flying the plane at the same time that they just don't have time to see it. They don't have that, they don't have that backup view of what's going on and they want to do it. They just don't have the time. And so I find it so exciting to sit with a business, see where those areas of opportunity are to make them more efficient or to gain them a little bit more ground. And then once we figure out where that is where can we then layer in AI to make it bigger, better, faster, stronger. And so that's for me, it's like this wonderful puzzle that I love to play with. So and I get to work with these ladies all the time.
Nice. Maybe we should work with you to try to figure out how to do a podcast.
I can do that. I do that too. I have 3 different podcasts that I edit and produce. So yeah, let's do it.
I think I mentioned this, but we wouldn't be doing this podcast if it wasn't for AI because it takes away all the stuff that we would never get to had it not been for the technology that's built into all these platforms now. So
yeah, it's
super
amazing.
Interesting. Yeah. So the name of the fund is Hudson Lewis. And I've never asked you this question, but what's the name all about?
So the name, as I started to try to name the business, I was looking for something that in my mind was strong and professional. And as I looked at names of companies and people around me that had companies, I realized that probably the 2 strongest figures in my life were my father and my grandfather. And so Hudson is my grandfather's first name and Lewis is a family name that we've got generationally. So my great-grandfather, my grandfather, my father, my brother, and my son all carry the Lewis name. So I thought, you know what, Hudson Lewis. I did a little bit of Google searching and found that there was no other companies in the United States that were titled that. And I thought, that'll work. Let's do that. So it's a family name.
It sounds institutional. Nicely done, right?
Thank you.
Yeah. So let's start with, if it's okay, the types of business that there's, you're very specific about the types of businesses that you're interested in help grow. Can we talk about that as a start?
Yeah. Deanna, you want me to take that one?
Sure.
So the types of businesses that we're looking to invest in are in businesses that are doing $1 to $2 to $3 million of revenue a year. They're running. They are businesses that we can step in and help. So they also contain, let me think of the best way for me to say this. They're cash flowing, they're revenue, they're repeatable. They typically have they're single founders. They're businesses that are looking to grow and be sold. But the people that are running them don't have the expertise to run their businesses. So those are typically the beginnings of what we look at for businesses.
And there's types of businesses that you're going to focus on as well, right?
Yeah, we are.
Go ahead.
Sorry. Go ahead.
Yeah, we're looking at the, home-based business sector, not home-based business, sorry, home services sector, HVAC, pest control, those type of businesses. And then we're also looking in the businesses that support those businesses, bookkeepers, CPAs, those kinds of things. And then also the medical, dentists, vets, chiropractors.
And what I like about these businesses is that they really, if you think about it from an impact perspective, they have 2 characteristics. They're kind of at the heart and soul of these communities. Every city community has a dentist, a vet, a CPA, a wealth manager. They have pests, they have irrigation, they have fencing, they have roofing, they have electrical, they have plumbing. And many of these industries or these businesses will not sort of transfer or get over this gap of AI enablement without some help. What's also great about them when we start to talk about the exit or the way our investors will make money is they're also very prime. Most of them are very prime for sale. And that's because they are generational businesses. We are looking at a macroeconomic trend of that transfer of wealth and those transfers of businesses happening in the next 8 to 10 years. So it's the right time in these businesses. Those businesses have huge impact on their communities and they don't have the expertise and they don't have the sort of the technology platforms. So it's kind of fun. But those 3 sectors, as Chris here mentioned, are ripe with those opportunities. And we've also seen, in terms of the exit, we've also seen interest already from PE. And there's about a dozen current PE entities out there with lots of dry powder looking for these roll-ups. So while we might somebody might enable one HVAC company, our goal is to roll up 3 of those at various stages and then package them so that they fit the size and the financial commitment that PE needs in order for them to get excited. Because when you start to talk about why they're ignored by these other sectors, a lot of times it has to do with size. And so by rolling a few of those up, those sectors, you get a great exit opportunity.
Yeah, the lower to middle market has suffered because there's so much money around that wants to write $100 million checks instead of $10 million checks. So there's a real advantage to aggregating them. Is it also fair to say that many of these businesses are going to benefit rather than suffer from AI?
I would say they definitely benefit. And I think the enablement of AI, I think sometimes people think, how are you going to just jump in and do that? That's probably not what we're going to do, because there's going to be an overall assessment of the company. And more than likely, what we're going to be looking to do is reset the foundation. Like I said, a lot of these companies, they've just started going. And, I'm working with a company right now where, the wife came in to help and everything lives in her head. And I believe there's a lot of companies out there where a lot of it's just tribal knowledge. And so really going in and taking the first, part of the time is to really understand the company and see where the foundation is wonky, see where maybe we're playing on Play-Doh and Legos rather than concrete. And wherever the Play-Doh and Legos are, that's where we're going to go in and go, okay, where could we adjust that? Where could we fix that? And then once the foundation has more concrete, that's where we go in and go, okay, now where can this company benefit from AI? Because just implementing AI off the rip doesn't necessarily mean it's going to help them. And I think the studies also are showing nowadays that companies that go in and throw in AI and just think it's going to work, but they don't do the training or they don't stay around, it fails and it just goes back in the dust.
Yeah, it totally makes sense.
Yeah. What I was going to add to that is that when we look at these businesses, even across sectors, there's some very sort of consistent themes around where there are opportunities to bring in AI. And for me, AI is as much as workflow automation, building that knowledge library that allows agentic workforce to come in, and ultimately just streamlining what is currently being done with Excel spreadsheets and what might be doing through a person answering their cell phone, right? How do it's very easy to automate and bring in, similar tools across all these sectors. There's some nuances to medical and healthcare that don't exist in HVAC and plumbing, but they still all have customers. They still have books to keep. They still have elements of their services and who that customer is, whether it's a house or whether it's a being. There still are some common elements. So it's actually, as an operator, and that's the benefit of having 3 operators in the business, all 3 of us see how challenging it might be if we move too quickly and we don't have a plan or a process in place. But once we do, we can build some trust and we can ultimately kind of streamline that process. And what I'm excited about is it doesn't have to be a lengthy process and it doesn't have to take a long time to invest and to exit.
And then is it also true that some of that gumming up of the works because the processes and the workflows haven't been automated and become efficient prohibit, even if you could do a lot of new business, you can't handle it. So maybe that will allow you to handle more new business.
Exactly. I think what you just said is like clearing out the gunk. Just like if you've got your pipes are gunked up, if you can clear it out, water's going to flow through. But if you're spending too much, if you're the person always answering the phone calls and then you can't get new business in, then that's where you're stuck. And I think that's one of the things we want to look at is where are we going to find something that's leaking money or leaking capacity or just gumming up the works? That's what we want that's where we start. And then we go in and say, because if you're just going to throw AI in, but it's not solving a problem, what's the point?
Yeah, what's the point?
Yeah, Janae, sorry, go ahead, Martha.
No, there's a little delay. Go ahead. I've got, stream of consciousness, so it'll come back.
Okay.
Go ahead,
I was just going to ask, Janae has a great story because there was a period of her life where she actually managed and ran a dental practice that went through an upgrade and then some form of an automation and then was able to exit. Share that story, Janae, because I think that one's interesting.
So I was managing a dental practice, and what we looked to do was expand the business. And so once we got the processes in place, we started to look at older practices that were in the area, the doctors that wanted to that wanted to transition but hadn't maybe kept up the technology in their practices. They hadn't gone digital. They were still using x-rays. They were still running books that were on paper, not even computerized. And so as we went through and purchased the practice, we could get them at a lower cost. And then we upgraded all the systems, added the systems and the procedures in place. We then could handle more patients, more load. We hired other doctors and were able to get, starting from one location, we ended up with 6 locations by the time that I exited from that business. So we found that by adding the technology, we just could increase the revenue that was coming in by 4 or 5-fold, depending on what the practice was doing. And each practice was a little bit different. So we looked at each one as an individual business as we purchased them. We also kept the older doctors in place for a while, so they had a soft landing to go to. They transitioned the patients, and then they could exit out a year or 2 later. So
Yeah.
it worked well.
Speaking about exit, your thesis in executing on these businesses is purchasing at least half or maybe more to have controlling interest of them. Did I get that right?
Yeah, depending on how each one of them is set up, we will invest and purchase a controlling interest in each of them. So depending on if there's one owner or 3, that would be determined by, obviously getting it in, looking at it. But yes, we will get controlling piece of that. So, but by doing that, it gives us the ability to make the changes in the business. It also helps us protect our investors.
And so far, how's that floated with is that something that causes a fair amount of pushback, or are they welcoming it?
I think we're finding both.
Yeah.
I think we're finding both. The thing is that if we go into a business and they are giving us pushback, they're not the right fit for what we're doing.
Yeah, I think
So
that's
we
pretty much
actually
it, right?
don't.
Yeah.
Yeah, we don't spend a lot of time once we realize that they're giving us pushback on that portion of it. It's just not the right fit, because there are enough of them that are looking for the assistance and looking to grow and move forward. That seems to be a fairly quick conversation in the beginning.
And I would say my background as a small business owner that exited 4 or 5 times, I've been on both the buy side of M&A and the sell side, and I found that first and foremost, every business had a price, right? Forget the fact that we're not ready to sell. There's always a price out there. Secondly, what I found was, as a buyer, that getting to know and having those provocative conversations about, are you ready to sell and what are you planning on doing, really adds a level of diligence that's human, which is they self-select. Like, they lean in and they're ready to deal, or they don't. And then thirdly, it really then, when you're buying those entities or even you're selling them, you're flexible on price because you see value in the transition of the business to an acquirer or to an investor at that level. It's a process that takes, more than a few minutes, but it saves you a lot of time in the diligence practice and even the going deep. That, again, I speak to this operator kind of mindset as opposed to a financial analyst with a spreadsheet in front of them. So having the advantage of being able to sit with someone and have that conversation really saves us a lot of time. And it's also one of those things that it starts to build in terms of word of mouth. So when we talk to one HVAC person, before we know it, we have 3 more on the line. So it'll be a fascinating process. But to your point of where are we? We're just launching the fund in terms of speaking to LPs. We're building those relationships, and we'll call capital once we have a sufficient commit and when we're ready to actually make the purchases, because we don't have to sit on capital before we are ready to buy. So it really makes the speed to market, the hold time on the investment, all very efficient and aligned.
Yeah, there's no point in drawing down capital if you can't deploy it, right?
Right. Yeah, we're not in the banking business.
Exactly. Yeah. So I'm wondering what you're seeing out there because of the heightened awareness of the value of these companies in the communities, the HVACs, the plumbers that aren't going to get replaced by AI. Have the multiples become frothy, or there's just still reasonable prices to be had from an acquirer's perspective or an investor's perspective? In your case, are they still reasonably priced, or are they expecting more than is reasonable?
I think the market conditions and the frothiness comes from AI, right? And so go back to the thesis here. These companies aren't able to, based on not having the expertise, not having the bandwidth, or not having the cash flow to actually enable themselves. They don't even put themselves in that frothy market. Now, there is PE coming in and making noise, but the businesses we're talking to, that 1 to 5 million in revenue, those are below where private equity is currently shopping. So they're not getting the phone calls. They aspire to, but they're just not there. So that's why the aggregation of 2 or 3 of those actually then puts them in a situation where they can be acquired as part of a collective as opposed to a single entity.
More of an interesting target. And so when you're investing in a company, I'm just trying to think of how the mechanics work, and you have controlling interest. Does the money that you've invested go to the balance sheet or the potential exiting owner ultimately, or both? So you can use that money to grow, right?
Correct. I would say both.
Yeah.
It really depends. And that's a consideration when we look at the matrix of what we're looking at. So we check the box around desire to sell and trust. And this is the type of business that wants to follow the plan. Then we get into it. We see what's there. Chrissy and the like do the analysis and start to make some changes. Those changes do require some cash and capital, because if you're going to make lead gen or marketing more efficient, you need to support that with some advertising budgets, while it be Facebook Marketplace or something like that. Small ad budgets or small marketing, et cetera, you need that capital. That's not something they've had access to. But at the same time, those investments, what's left in a short 1 to 2 to 3 year window, will much of it may just drop to the bottom line, plus that margin expansion. So now you got top line revenue going up, you've got margin expansion, and you've got capital on the bottom line. So it sounds like a perfect match. But there is going to have to be some investment beyond the expertise to actually enable those companies and actually take advantage of that growth opportunity.
Yeah, totally makes sense.
That goal is to we want to take that profitable business, give them resources and operational support, become more valuable.
Yeah. And geographically, is it focused on where you are now? Where are you going to focus the business development in for these companies geographically?
Well, technically, we're looking at the entire U.S. However, because we are all located in Texas, it does make sense that we focus and start in this area. But I don't think it's necessarily somewhere that we have to be. I think we can look at businesses across the U.S. So
probably plenty to do in Texas, right?
It's a big state. It's a big place.
Everybody's moving to Texas.
There's a reason for that.
Can attest to that.
Yeah, there was. I was just in New York, as I mentioned, and there's a long-standing firm there that worked with family offices and deploying capital, and they just and they couldn't be more New York-centric in terms of their interest with art and all that kind of stuff. And they just pulled the ripcord, said enough's enough. Of course, we have Mondani doing his nonsense, and it's easy to dislike that. It's not a political statement. It's just, the way it is.
Yeah.
The optics are really bad for businesses, but this particular person I know well enough that the last thing I thought he would do is pull the ripcord and leave New York City. It's just like, enough was enough.
We sit at dinner tables with lots of people that have that similar story here in Texas. They've moved, they've come because of that. So, yeah.
Well, there's also the West Coast. California has gifted Texas and Austin in particular a lot of Angelinos. I came via Oregon, but it's still the same point, is that there was an opportunity during the pandemic for people to work from anywhere. A lot of Californians found that Texas and Austin were a great place to be. We saw some people coming in from Colorado, and, weather aside, during the summer months, there was just a beautiful place for people to land. And that's where we saw the growth in Texas, in Austin, Dallas, of course, Frisco, and our friends in Houston. So it's a good market and it's also become a really big tech market. A lot of innovation, and all the multinationals are here in Austin or Houston or Dallas. So it's become a pretty vibrant community.
Yeah, I was in Austin a year and a half ago. Things were hopping. It was really vibrant. The other thing is there's a big challenge in hiring talent because of the open AIs and the Anthropics and Meta and so on that are just paying premium pricing for engineers and that sort of thing. It doesn't sound like you're going to like you have this embedded on your team. You don't need to hire these high-priced people to execute on your thesis, right?
Not that we're planning on. We don't see the need for the high-priced people at this point, because we're looking at these smaller businesses that are really that a single person is running, and they're essential people. So I just don't see us needing that.
How's the business development from a target perspective? How hard is it to find these companies that are potential good fits for you?
It's interesting when we sit with people and have discussions, whether it's an HVAC company or even sitting with investors, it always seems to be that somebody will say, I know somebody who needs you. I know somebody who needs you. I have a friend who's been trying to sell a business and their son's not going to take it over and they're not sure what to do. So as far as what I do, and I'm a people person. I love that I get to work with Deanna and Chrissy because they're process people and they like to be on the computers and I like to be talking with people. So most of the leads that I get are literally passed down to me from friends of friends. And we're just seeing such a need for that. And we're still in the process of vetting a number of these. So I just see us being able to come in and work with a lot of people. I don't know. That's from my perspective because I sit with people.
Well, and the systems builder here who likes to build systems, when I think about go to market, there's some natural places that these all businesses have in common, which include small business associations, trade associations. So you can enter those conversations and make people aware that we exist and create demand for our time through those associations, organizations, and so on. And at the same time, as Janae mentioned, word of mouth works, especially when you are visible to some of the accounting, some of the tax people, because those are the conversations those small business owners are having with their accountants, with their bookkeepers, with their wealth managers, because it's like, wait, what's the planning cycle? So we've had inbound from people who are advising those companies on any type of transition, technology or wealth management or, just the day-to-day accounting. And so those types of points of entry and then just making it work. And then imagine picking up the phone and saying, here's 10 more HVAC companies. Let's just see who's interested. And I'm surprising we'll probably get a multiple. And then it's about how do we get through a process that allows us to vet.
Yeah. Sounds to me like once you get the flywheel going, you're going to have more to talk to than you need. What about, what is it? This unused resource, the Better Business Bureau in every town, right? Where people are, it's old school, right? But isn't everybody in that town know the Better Business? Maybe there's another one. Am I getting it right? Is it the Better Business Bureau?
Yeah.
There's usually
small business, better business.
Yeah. There's usually a community, not the Kiwanis but you know what I'm talking about.
Yeah.
There's
You're
usually
about the chamber. The chamber.
the chamber.
Your chamber of commerce. I think it's what you're talking about.
Yeah, it's exactly what I was talking about. Chamber of Commerce. Yeah.
And depending on the area, some of them are just they're so big.
Yeah.
There's a small community just south of Austin in Buda, and that chamber is so active and so massive for this smallish little town. Now, granted, the town's growing, but they're just everywhere and everyone's involved, and they're very well connected to each other, which is really fascinating to observe because sometimes they're not. They're just show up at happy hour, but these guys they know each other. And when you talk about something like, oh, I need to get you connected with so and so, the chambers are really great.
Yeah.
The other area that's not surprising is I'll call it the online directory business. So it's the Facebook marketplaces. It's the things like Neighborly. We can just scrape and farm those online listings for those local resources and actually start to mine what is available to us in those businesses because there's so much publicly available data that surfaces through those directories and through those online business, online marketplaces. So I think it's better than a phone book. Let's just put it that way, right? It's like, remember how you used to go through the phone book and you're like, I need a plumber.
I do.
This is a better version than the phone book.
Every company's ABC.
Yeah.
Exactly.
How do I get to the top of the yellow pages?
Yeah, boy, we've come a long way from the phone book, the yellow page. It's crazy. The thing that we see a lot of is the startup communities, the tech stars, all that, having their cocktail parties and getting to know people, but we forget about the Chamber of Commerce. They know all the mature companies, or at least the ones that are owned by mom and pop, right?
Mhm.
They know them all. Yeah, sounds like a target-rich environment. So tell us a little bit of what would be helpful now for you and let's start with money raising. Who are good? What's the profile of a good LP for you?
Deanna, do you want to take that one? That seems like that fits right down your number route.
I'm going to get all kinds of labels put on my head. The profile is for us because of both the type of investment opportunity, which I would characterize as we're buying, profitable businesses, we're enhancing, we're packaging, and we're exiting. That profile fits very nicely into a family office or even a multifamily office. What I like about those entities is they take a fair amount of time and diligence, but once we develop a relationship there and we're able to walk through and demonstrate the thesis, they're willing to write, 7+ figure checks. And so that in our first fund, ultimately we'll have less people to work with, but greater results. So we like those. We also like high net worth individuals who perhaps were in the position of these target companies in the past. So imagine an entrepreneur and or a business owner who was fortunate to exit through a portfolio approach or even through just a hot market, and they had reached a certain size in revenue that they were attractive to private equity. Those exits and those people who came from that world very much understand what we're talking about and sort of wish they were around when we were around when they were looking to make that exit. So those are the two people that come to mind. The smaller checks and the smaller entities, I want to encourage, everyone to take advantage of the wealth opportunity here. And so we love a minority investor. We love a female investor. We like people who understand sort of being an operator and then ultimately having an opportunity to make some material wealth. And then lastly, I would say people in our network and then people in our extended network with the likes of your business. I'd like to spend less time raising capital and more time deploying capital. So the people that are closest to us and people who are closest to people that we've engaged with are very attractive to us. And so we might turn the table and ask you, but for us, it is really those family offices who understand the cycle, and we're more than happy to go through the diligence phase with them. The high net worth former business owners makes sense. And then, we'd like to disperse and give opportunity for wealth across a number of sectors.
Yeah, I think that makes perfect sense. The number one thing is you go to the people you know first. I mean, it's
Yes.
absolutely the right thing to do, and then go from there. And invariably, what you said is true. If you have somebody in a family office writing a good check as your first fund, then they've got dry powder to do the follow-ons and bring in their friends.
Yeah.
I mean, it goes from there. And we see it happen all the time. They get past the due diligence and they say, well, there's two other people that probably would be interested in this. Let me introduce you. And then once that happens, and then you go on your second fund, everybody in your first fund, unless you blow it, comes under your second fund, right? And, life becomes a little easier, and the hardest, the things that are replaced the difficulty of raising money are replaced by operating multiple businesses,
Yeah.
right?
Yeah.
So, which, it's kind of like nothing ever gets made until something's sold. So you still have to raise the money or else you won't have a business, right? So
100%.
the pain going through that is definitely worth it for sure. Yeah, but we've seen lots of emerging managers come, fight the good fight, get all the arrows in the back. And then the next fund is just, so much easier from a fundraising perspective, harder in other respects, but fundraising becomes a little easier, no doubt. What's the, Deanna, we spent a lot of time during COVID driving around the national parks.
Yes.
And, driving through towns that were, not exactly economically doing well, but I always noticed that almost in every case, the nicest business building in the town was the electrician by a factor of many, right?
Yeah. Yeah.
Are those potentially good businesses or to acquire, or are they just not interested because there's people that just want to succeed in, the son or the daughter or whatever? Are they target companies,
Oh
or
yeah,
is it?
they're
I think
big
they could be.
targets.
Mm-hmm.
Yeah.
Yeah.
Yeah. I mean, I wouldn't want to make any sweeping generalizations because having a beautiful building in a small town doesn't necessarily equate to a business that has margin expansion and,
Good point.
desire to
Yeah.
sell. But but generally speaking, they're doing something right if their building is good. And it doesn't surprise me.
It could be money
Plumbers,
laundering for all we know, but
yeah. Plumbers seem to have great trucks. Electricians seem to have nice buildings. Lawyers and doctors and even, the local Indian chief have a signature move that you can say, oh, that guy's doing well.
yeah.
But it's different in the different sectors, or it's different in the different markets. But there's almost, you really kind of hit it on the head. There are these businesses that are just great businesses that either are not ready or haven't thought about, or still having that difficult conversation with their family members to say, hey, we should think about selling this. And so just being the person that walks in and introduces this to them and developing the relationship, like Janae mentioned, is probably the biggest first step. That again, in an economy and a market that's moving kind of feverishly, just taking the time to have those conversations with the family members and or the family
Yeah.
is really a pace and a passion that is, I think, probably unique to the three of us, because I don't see that happening when you talk about the frenzy that is private equity and, small business,
Yeah.
small market cap.
Yeah. It was really, fascinating to see the electricians. Look, I've always been fighting for new business my entire life, right? So running through walls, trying to figure it out. And every time I tried to get a plumber in Park City who said 3 weeks, which translated into I have more business than I can handle,
Uh-huh.
it
Yes.
was an anathema to me. Like, okay,
Yeah.
it's no doubt a lot of work and experience and so forth to be able to be in that position, but it's a nice high class problem to have, right?
Or it could go back to your earlier point that they can't grow. They're
Right.
stuck.
They're stuck. Right. Yeah. In this particular case, he was a one-man band, but
And that's it could be very
Yeah.
stuck.
Most of them are very, very close to that.
he always had a smile on his face when I ran into him at Whole Foods with his carriage full of high-priced stuff.
There you
Yep.
go.
So I think you did a really good job of profiling the potential LPs. It's a good cross-section, and I think that the people who have had operating businesses, and that's how the prior generations made their money, have an appreciation for investing in these type of companies. And so I think you'll have some luck with those conversations in that way, no doubt. Is there anything else you'd like to share with everybody? I kind of ran out of my stream of consciousness question.
I don't have anything else that is sitting top of my mind. I just thank you for giving us the time and having conversation with us. I appreciate that. It's nice to get on and just be able to talk and answer questions about what we're doing.
Yeah, it's my
And-
pleasure.
And to your earlier question, where are we at? We're really just finally open for business. So as you know, we sat with you at probably week 1 of our capital raise, and we're in the dead point of almost the end of the dead point of summer. So we're starting to see some interest and pick up, and we're starting to do webinars and outreaches. So we encourage any of your listeners to find us and join us, because we're ready to raise the capital and start the business. So we're open for business.
That's awesome. Yeah, we'll make sure everybody knows how to get a hold of you, of course, for sure.
Terrific. Thank you.
Thank you.
Perfect.
Yeah.
Thanks, Arthur.
Yeah, thanks everybody.
Arthur.
You're
Thank
welcome.
you.
All right.
Thanks for everybody
Take care.
for joining us today. Hang
Yeah.
in there, guys.